If you're a Canadian business owner, there's still time to cut your tax bill before year end, but only if you take action now. Let's talk about the real practical moves you can make before December 31st to lower your taxes and start next year stronger. And don't worry, this isn't a deep dive into tax code. Think of it as a quick checklist we can run through together. Most of this applies if you're incorporated, but even if you're a sole proprietor, a lot of it still matters. If you've ever wondered, what should I do now to pay less tax before December 31st? This is it. Let's start with the big one, how you're paying yourself. Salary, dividends, or a mix of both. Salary lowers your company's income and gives you RRSP room. Dividends are more flexible if cash flow's tight. And don't forget your family. If your spouse or kids actually worked in the business, paying them a reasonable salary can move income into a lower tax bracket and save you money overall, as long as it's above board. And here's a quick tip. If your company's taxable income is close to the $500,000 small business deduction limit, paying yourself a bit more salary can keep your profits in that lower corporate tax bracket. Easy win. Getting this right sets up the rest of your year-end plan. And if you want a deeper breakdown of the differences between salary and dividends, check out my other video where I walk through exactly how to decide what's best for your situation. Once you've decided how you're paying yourself, make sure you're setting yourself up for retirement. So like I said, salary creates RRSP room. So if you're planning to contribute, make sure you've paid yourself enough. And don't skip your TFSA either. If you've got cash sitting in a personal account, move it over before year end so it can grow tax-free. And if you qualify, check out the First Home Savings Account. It's like combining an RRSP and a TFSA. Small moves now, big differences later. All right, on the business side, let's talk expenses. If you're going to buy it anyways, buy it now, before year end. Supplies, software, insurance, professional fees, get them done before December 31st. If you've been planning to upgrade a laptop or office furniture, doing it now means you can start claiming depreciation right away. Quick story, a client once asked if they should buy 20 laptops before year end just to save on taxes. I said, isn't it just you in the business? They said, yeah, but I don't want to pay taxes. No judgment, but don't be that person. Spend where it makes sense, not just to save taxes. And if you've gotten rid of old assets, remove them from your depreciation schedule. No point claiming CCA on something that doesn't exist anymore. If it makes sense, push some income into January. That might mean holding off on sending invoices or delaying a bonus. The company still gets a deduction this year, but you or your team don't get taxed until next year. A little timing can smooth out both taxes and cash flow. If you borrowed money from your company this year, pay it back before year end. If you don't, CRA might treat it as income and tax you on it, and make sure it's documented. CRA loves looking at shareholder loan accounts. Also, not every transfer from your business account is income. Some are reimbursements or repayments. Just keep things clean and documented so nothing gets misinterpreted later. If you've got a health spending account, max it out before year end. Unused amounts might reset. And don't forget the smaller stuff. Your cell phone, mileage logs, home office expenses, it all adds up. If you use your vehicle for business, double check your mileage log. CRA wants details, and 5 minutes now saves hours later. And while you're in cleanup mode, check your HST filing frequency, annual, quarterly, or monthly. See what makes most sense for you. A missed filing or short payment comes with non-deductible interest. Stay organized. It pays off. If you've got a team, this one's a win-win. Pay bonuses before year end. The company gets the deduction now and employees don't pay tax until they get the money. And small perks, gift cards, team lunches, holiday events, can all be deductible if they're tracked properly. These aren't just tax moves, they're retention tools. A well-timed thank you goes a long way in keeping great people. If you're planning to donate, do it before December 31st. That's how you make sure it counts this year. And if your corporation makes a donation directly, it's a deduction against business income, not just a personal credit. If you're giving anyway, do it the smart way. Before the year wraps, give your books a quick cleanup. Reconcile your bank and credit cards, write off bad debts, clear out obsolete inventory or equipment. Make sure HST, WSAB, and payroll remittances are up to date. It's not glamorous, but it makes tax season way smoother and keeps CRA happy. If you owed more than $3,000 last year, personally, corporately, or for HST, you're supposed to make installments. And if you haven't, catch up now. CRA charges installment interest, and it's not deductible. And get ahead on your T4s and T5s. They're due in February, but it's so much easier to prep them now while everything's fresh. Future you will thank you. Now let's zoom out. Do you need to pay more salary to stay under the small business limit? Would a holding company or family trust make sense next year? Do you have a capital dividend account from insurance or capital gains? Maybe it's time for an individual pension plan if your income's been consistently high. Even if you don't act now, start planning ahead, especially if your revenue's growing. you're buying property, or you're investing inside a company. These decisions will all have tax implications. And while you're at it, review your shareholder structure or even your succession plan. Small tweaks now can create big savings later. So here's your bottom line. Small moves before December 31st can save you thousands. Most business owners wait until tax season, but by then it's too late. And paying less tax isn't just about saving money. It's about having more control, more options, and more peace of mind heading into next year. So take an hour this week, grab a copy of our year-end checklist down in the description and make sure no money's left on the table. And if you found this video helpful, you'll probably like this one too.